What's going on, guys? Welcome back to the channel. Today, I want to talk about the art of scaling up our trades. Now, the first thing that I want to talk about, and we're going to jump right into this, and we're not going to waste any time. Let's jump right into this thing. You're going to see my face for quite a bit in this video. We will jump into my trading, some of my scaled up trades, giving you examples of how I've scaled up later in the video with some TradeZella recaps and some live trading. But the first half of this video is going to be primarily me talking to you about some of the tactics and some of the things that I think you should pay attention to. So, number one, are we ready? Are we ready to scale up our trading? And I think the most important thing here, and I think the typical thing that you hear from most people is be consistent for 2 to 3 months, be consistent for 6 months, be consistent in your trading. Now, while that is temporarily true, and while I do believe that, there is another part that I think is heavily overlooked that I think you should be paying attention to. The question that I want you to answer is, are you comfortable in your trades? When you enter that position with the current size that you're trading, are you comfortable? Do you find yourself getting out of positions early? Do you find yourself eager to get out of positions? Do you find yourself getting out early, getting out late? Do you find yourself not executing to the best of your ability? If you are, then I would say you are not ready to scale up your trades. Every step in your trading you should be able to master. So let's say you start trading with $500 position sizes. You should be able to trade that position size, not perfectly, because there's no such thing as perfect in trading, but you should find yourself executing at a very good rate at that position size. Then we move up to the next $1,000, $2,000, $3,000, and we keep pushing it up. And the thing that you want to answer at every single level of your trading, am I executing correctly? Am I still making stupid mistakes very consecutively? Now, stupid mistakes are going to happen at any level of trader. I still make stupid mistakes at the level that I trade. It's going to happen forever. There's no such thing as never making a stupid mistake. However, we should be able to look back at our statistics, we should be able to look back at our trading, and we should have a general confidence and understanding of what we're doing and be in control of our trades at the level that we are currently trading. So that is the first thing I want you to answer if you're trying to answer the question of should I scale up my trading? Are you comfortable? Answer that question and then let's move forward. If you are, if you could confidently say that you are comfortable at the current level you're trading, then I think it is proper to scale up. It's proper to test yourself. Trading is all about testing your abilities in trading, testing your abilities to control emotions. This is the only way we're going to grow as a trader, is if we continue to test our abilities. Now, as we move through the ranks of scaling up and trying to get comfortable at each level, the next thing I want to talk about is a general guideline that I tell people that ask me and the people in my community. The general guideline that I would tailor your position sizes versus your account size, right? So how much size should I use versus my account size? At each level of scaling up, what is that sort of general rule of thumb that I would use to ensure that you're still in a proper risk portfolio, right? Your proper risk aversion, you're still trading correctly in terms of risk versus your account, right? What is that general rule of thumb? And for me, it's a rule that I don't know if I've created, but I think it is a very valid rule, and it is the 10-20-2 rule. And I'll make sure to put this up on the screen for you guys to sort of visualize what I'm talking about. The 10-20-2. And what this means is 10% of your account in every position you take. So let's say you have a $10,000 position or $10,000 account size. That is a $1,000 position size every trade you take, keeping it consistent, $1,000 in every trade. Now, the 20% is the stop loss rule. And this is where I want to go ahead and pause for just 1 second, right? Because there is a caveat to this stop loss rule. The 20% is a 20% stop loss. Now, when I say that, that does not mean that we exit positions at 20% every single time, that we have to exit at 20%. What this means is that if you take a good trade with a good entry, it should be 20% stops. You should be down 20% on a good trade, right? A good trade that does invalidate If you had a good entry, if you had a good plan, and unfortunately that trade does not work, which will always happen in trading, it should be no larger than a 20% stop. And what this means and what is so important here is the entry points. The entry points on your trades need to allow for a 20% stop loss. And the best way to visualize this is using some whole numbers, and we can walk through that right now. Let's say you are trading a break and retest, and that's the strategy that I use. It's based off key levels. I'm sure you guys are very familiar if you've watched my videos before. Let's say we're trading a break and retest of a $100 level on NVIDIA, right? We're under 100, we break above 100, and we're trading back down to retest that $100 level. Now, we want to make sure that our entry is close enough to that $100 level after getting confirmation that if it invalidates, if the stock goes back under 100, if NVIDIA ends up failing that $100 level, we should only be taking, at a maximum, a 20% loss. What this means is that if NVIDIA does a break and retest of 100 and it goes up to 102, right, and then you take your entry, and you have $2 of underlying risk, then you're probably going to be at a larger than 20% stop loss, right? Because your entry is extended, right? So the 20% stop loss that goes into this rule has everything to do with entries. We need to make sure our entries are proper. We need to make sure that our entries have good risk reward. And if we're taking a trade and we're losing more than 20%, that likely means that our entry point was not correct. We'll talk a little bit more through this on the computer because I'll be able to actually visualize this with you. I know it might be a little bit difficult to sort of wrap around what I just talked about, just looking at my face and talking. I'll go ahead and visualize that 20% stop loss in some more detail on the computer in just a second. Now, the last part of this rule, 10-22, a 20% loss with a 10% of your account position size is a 2% loss on the account. A $1,000 trade taking a $200 loss is a 2% loss on a $10,000 account. That is a very comfortable place that I totally recommend newer traders, beginner traders to live within, right? Stay around that 10% in each position. If you want to push it maybe up to 15, which is what I do at times, 15 to 18%, make sure that your entries allow for about a 20%, right? If we do drop below and we do invalidate a trade, if you're losing 30, 40, 50%, that means that your entry point was incorrect. Our stop loss should always be a static level on the charts. The market does not care about your 20% arbitrary number on the contract, right? If we're down 20% on a contract, we're not just exiting it. We need to stay in that position until our stop loss level has been invalidated. But if we are hitting that stop loss level and we are down 40, 50, 60%, what does this mean? This means that your entry was terrible. Really, that's what it means, right? We need to make sure that when we enter, we are having a good risk reward. We should be losing no more than that 20%. That's about as much wiggle room as you should need if you have a good entry point. And that's a 2% loss on your total account. So that is that next thing that I want you to pay attention to. When you start scaling up your trades, we need to still stay within that risk parameter to make sure we're not losing control and sort of going on tilt, losing large percentage points when we start to scale up that position. Now, the last thing I want to talk about before we jump into the charts and sort of talk about my journey with scaling up is making sure you're able to scale back if necessary. If you do push it, right? And I don't think there's anything wrong with pushing it. At some point in your trading career, you need to push it. If you do push and you start to get more aggressive and you start to feel slightly out of control and you're taking some losses you don't really like, you're not feeling comfortable in trades, you're getting shaky, your executions are bad, you're getting out of positions too early because of emotion, you need to have that mental fortitude to come back down to reality and bring that size back down to where you were comfortable previously. You need to be able to know when things are getting out of control and you need to back off, right? This is very important and something that will protect you in the long term if you are able to back off and not just see all the money that you can make. You have to make sure you do this in the proper way, the proper style, that long-term idea. if you feel uncomfortable on that next step that you've taken, you need to be able to back it off. Some of the trading that you guys have seen from me lately have been very big, right? Some big trades, big dollar amounts. But to be honest, guys, it's the same trading it has always been. The same percentage points, the same size in the trades percentage-wise. Obviously, the dollar amount getting larger. But I have done this for 10 years, and I have done this, in my opinion, the correct way. I've been very risk adverse. I've made sure I've understood my strategy before scaling up. I've made sure I've had a good system. You guys see me on the pre-market live streams, on the videos that I share. I trade the same exact thing every day. I know what I'm looking for like the back of my hand. And all it takes, once you have that education, once you have that strategy, once you know what you're looking for, all it takes is just increasing your position size. And that is how we scale our trading. So the education, the strategy, all of that, that's all before what we're talking about today. That's, of course, something you need to know and you need to answer yourself. Are you comfortable with that? Are you ready to scale up? That's where we started this talk with, right? We started with, are you actually comfortable? If the answer to that is yes, we stay within that risk parameter and we continue to push our trading higher and higher. So I hope you enjoyed that little talk there. Quick, brief talk about scaling up, right? Are we ready? Are we comfortable? If the answer is yes, let's keep pushing. Next step, let's test ourselves. Are we comfortable here? If we are, let's keep pushing it higher and higher. But we always want to make sure we have some kind of a risk parameter. That 10-22 rule, I think, is a great thing to follow. With that said, let's go ahead and jump into the charts. Let's talk about some of the recent trades that I've taken, right? Some larger trades, but still that same percentage point risk that I have always taken. So guys, what we're going to go ahead and do is we're going to pop onto TradeZella here and we're going to walk through my entire trading day from yesterday. I have every one of these trades recorded live so that we can walk through every trade live. You can watch how I did this live, but we're also going to dive into TradeZella and look at the statistics of every single trade. Now, what you're going to see is my position sizes. We're going to really focus in on the position sizes. And it's something that I have been getting a lot of comments about lately, which I understand, but this is something that I will rebuttal here. I have seen a lot of people reach out to me and say, man, you're crazy for trading 100 contracts. You're crazy for trading 200 contracts. That number, the question of asking how many contracts someone takes is so irrelevant. The relevant question that should be asked is what percent of your account was in the trade? Right? What was the equity that was in the trade? That is the important question, right? And that is what I'm going to walk through here, right? I follow that 10-22 rule relatively closely. I do push it out of its limits a little bit, right? Because I am a consistent trader. I've been doing this for 5 years consistently. I push myself. Sometimes I take some larger size. Sometimes I push it up to around that 15 to 18%, which I am comfortable with. But as a beginner, I would say to keep it at that 10%. But you'll see that my risk is always about the same. Taking about the same position sizes on confident trades. This is what I want to continue to do. Now, as my account grows, which is now over $200,000, you guys have seen that, and I'll verify that here in today's video, I am going to have to take $20,000, $30,000, $40,000 position sizes to stay at that same risk tolerance. I would personally be doing myself a disservice if my account grows and I continue to be scared of increasing size. If I have a $200,000 account and I'm still taking $2,000 position sizes, I'm trading with 1% of my account. I am not going to see growth by doing that, right? So I need to continue to keep that percentage point consistent, right? And so this sort of talks to the scaling up of trades. So with that said, let's go ahead and dive into the TradeZella charts, right? And so let's go ahead and walk through every single trade that I took yesterday first, and then we'll go ahead and walk through it a little bit more with the live trades. The first thing I want to do is I want to pull up my Interactive Brokers account, and you guys can see that right here. This is my Interactive Brokers account. This is my trading day. It was about a $23,000 trading day, and I'm still holding some trades, but you can see the account size is up to $225,000. So this means a 10% account, a 10% position would be a $22,000 trade, right? And so to take a $22,000 trade on, let's say, these NVIDIA 117 calls, I have to take 100 contracts, right? I would be doing a disservice to myself by not taking that size. This is the same exact thing as someone with a $1,000 account taking a $100 position. There is no difference. It is 10% of your account. 10% of my account's 22,000. I need to take 100 contracts on NVIDIA. It's the exact same mentality, right? So I want to make sure that is very clear here. Now, we can see this is my first trade of the day from yesterday. This is an NVIDIA long off of 112. This is a break and retest of 112. We'll go through all these trades later on. The first thing I want to go ahead and share with you is this right here, right? That adjusted cost. That is how much I put in this trade. So right there, if we calculate this, we'll go ahead and pull up the calculator. So we get all those numbers. Let's go 225,000 divided, or no, let's do the first number first, right? That's how we have to do it. 31,500 divided by 225,000. That is a 14% of my account position. That's all good. That's in my risk parameter. That's good to go, right? Very comfortable there. So that was the first trade, right? Let's go to the next trade. Microsoft. Microsoft was about a $23,000 position, right? Very nice. Let's go into our calculator. Let's go 23,240 divided by 225,000. I didn't do 225,000, but it's 10%. I think we can do the mental math here. It's about 10%, 9.2%. Good, right? Check. Good. Risk parameters in check. That's perfect. That's what I want. SPX, 5,000. I take it a little bit easy with SPX because it's SPX, but this one, 5,000. Good. Risk parameters in check. Very good. Next one, Tesla, right? Here's a losing trade of the day. This was a losing trade. I lost about $3,400. Lost about 13%. Again, it was a good entry. It invalidated. I lost 13%. Good, right? The statistics are lining up. This is the type of stuff that we need to keep going through and understanding. So these trades are valid, right? 13% stop loss. That's very good. Size, 25,600. That's 10%. Perfect, right? Good trade. This is a good trade. Even though it's a loss, we can understand from, we'll learn from it. But it was, in terms of risk, it's the right trade. And this was 100 contracts, right? Very good. SPX, pushed it, right? Pushed this one. Not going to lie. I pushed this one. But I love this trade. And I will talk through this trade, and you'll see how confident I was when I took it. I took about a $43,000 position size, which was, at the time, let's go 43,500. Let's go to 22,500. About 20%, right? That's that limit right there. Limit. Boom. No much more. Like, that's it, right? That's that 18, 20% that I was talking about. That's about as far as I'll take it, right? So that was about a 20% size in that one. Little bit on this large size, right? Let's take it easy, okay? Right? When I start looking at that, I'm like, all right, let's take it easy there. That one was a little bit big. Next, Amazon, 26,500 in the account or in the trade, right? Boom, right there, 150 contracts, 26.5, 10%, 10, 12%. Perfect, right? And then some swing trades are smaller, right? This was a little attempt. Oh, this was E-Trade, actually. So let's avoid those. This was a swing trade. You can see 4,500. Swing trades, I'll dial it back, right? Because swing trades, that's a whole nother beast, right? You can't really manage those as quickly as you want if you are holding them overnight. So I'll dial those back. But in terms of my intraday scalps, you can see here, it was all around that 10 to 15, sometimes pushing it a little bit more, but very rarely. And that contract size has to resemble how much equity I need to put in these trades. So I hope that this is a good example here of what I do and what we just talked about in the intro of how I set up these positions and how I set up my risk parameters. So what I want to do now is I want to run through some of these trades and then we'll watch them live at the end of today's video. The first one I want to run through is NVIDIA. This is that first trade. This is that $31,500 trade. It's about a 10% win, 100 contracts. Why did I take this trade, right? What was the mentality behind this one? So let's go ahead and take a look at this trade. This trade was a 112 break and retest. So I'm going to go ahead and turn on the after hours action. We can see right here, right? We have that after hours on our charts. We can see the previous day highs was around this 111 level. We also have this previous pre-market high and that daily 20 SMA around 1150. And then I had a very key level at $112. This was a very key previous level that I wanted to see NVIDIA hold above. I'm going to go ahead and show you that level right here. This was all right here, 112, 112. I was looking for NVIDIA to give me a break and retest of 112 for upside. I also was paying attention to what NVIDIA was doing around that previous day high and that daily 20 SMA, right? That's sort of what my mentality was on that trade. So I'm going to dive down into the 2-minute chart where we can see is where I traded this, and I'm going to show you exactly where my entry point was. So right here, is the 2-minute chart on NVIDIA. Let's go back to that yesterday, which is right here. And we can see, right, early morning, we're looking at NVIDIA, right? And I'm going to go ahead and turn on the appearance tab, turn this and fill the candles. We can see NVIDIA started the morning with a little pullback, right, into that 112 level, right? And I started to see some demand stepping up there. I started to see us holding that daily 20 SMA, and I also started to see the market pushing higher. This was where I went ahead and I took my entry, right? And so I'm going to go back to TradeZella because this is a fantastic example of that good entry rule. So right here, I took my entry of 100 contracts at 945, right? 945 was my entry point. And so 945 was right here, right? It was right in this area right here. And so in this position, I am risking about $1 on the underlying stock. $1 on the underlying stock with an at-the-money contract, which typically has a delta of around 0.5, is about a 50-cent loss on the contract. With the contracts trading at $3, right? So the contracts are trading at $3. I'm risking about 50 cents on the underlying stock, give or take, using that delta as a calculation. So if I'm risking 50 cents, let's say these go down to 250, let's say they go down to 260, 265, right? If you add that to 50, that's where you get your entry point. So let's say I'm risking $1 on the underlying, which is about a 50-cent loss on a contract because of that delta, give or take. It's a rough estimate. If we do 265 divided by 315 minus 265, that's about a 50-cent loss. 50 cents on 315 is a 15% loss, right? So that is good in my risk parameter. That means that my entry point was valid, right? I am risking, using that delta calculation, about 15%. And I hope you sort of understand that calculation. I know it may be a little bit more advanced, but every dollar on the underlying you risk is you will lose the delta on the contracts. Deltas with at-the-money contracts are typically around 0.4 to 0.5. If I'm risking about 50 cents on the underlying on a $3.15 contract, that means I'm risking about 15%. So that means that if NVIDIA was to fail and move back under 112, I would have lost 15% on this trade. And that is perfect. And that means I have a valid entry on my break and retest level. If I would have entered here, right, and risked $2 on the underlying, this would be a 30% loss. Bad entry, right? And this is where those entries start to come in, right? So great entry there on NVIDIA. Got that break and retest. Analysis was correct, and I had a very nice ride on this trade. You can watch this live later in the video. So the last trade that we're going to talk about here is Tesla. Video is getting a little bit long, and I still want to include that live trading footage. So we're going to go ahead and wrap it up here after this trade. And I hope you're starting to get a picture for what we talked about in today's video, and I think this is a great way to end it. This is my losing trade on Tesla, and you can see I got in with 100 contracts at around 1039, right? I lost about a 13%, right? Lost about $3,300, $3,400, and I put $25,000 in the trade, right? So on this trade, I was looking for a failure of a very major previous 205 supply. I saw Tesla get above it, fail. I saw Tesla get above it and fail. So I started to notice that we were attempting to fail that 205 level, and I was looking to short this 205 and look to see if Tesla could at least pull back to this 200 and possibly roll over further back towards this 202. This was my trade idea. Now, I needed to make sure that my entry point was close to my stop loss level, right? I needed to try to find an area that would be close to my stop that I started to find rejections at. And so right around this time, and you'll watch this live, I believe I have this one live, you will see that Tesla starts to show some rejections around that 205 spot. And I figured that Tesla might be creating a little bear flag below that 205 supply after a little liquidation, right? A little liquidity grab, right? You saw liquidity grab, come back down. I figured, okay, we might see that bear flag and then fail that 205 level. That's what I was looking for. So you can see my entry point was at 1039 right here. 1039 was my entry point. And 1039 was right here, right? So my entry point was around that 205.50 level on the underlying stock, meaning I am risking about 50 cents on the underlying, meaning I am risking half of the delta. If the delta is 50, let's say I'm risking about 25 cents on the contract, 25 cents, right, on a $2.56 contract minus 0.25 is 231. 231 divided by 256, right? That is about a 10% loss. Obviously, the 90, it's about a 10% loss. I end up around a 13% loss. So a good calculation using that delta, give or take, right? And so I'm understanding when I'm entering these trades, okay, I got about a 50 cent underlying risk. That should be around a 10 to 12% loss, right? I'm comfortable there, right? Let's take an entry here. I'm comfortable with that risk parameter. So that was my loss on Tesla. You can see that I got squeezed out. And the key here is to stick to your stop loss, right? If I didn't stick to my stop loss, look at where it went. I would have been down maybe 20, 25, 30% there. And who knows? Tesla could have continued higher, right? So sticking to that stop and sticking to those risk parameters. So guys, I hope this was a good video. I'm trying to explain scaling up, staying within risk parameters, all those things that I know we have a lot of questions on. A little bit of a different video that I typically do. So I hope you did find some value from it. I shared a few of those trades at NVIDIA. I shared that Tesla, shared with you guys the sizes that I'm taking and how I'm scaling up my trading, but how I'm still staying within those parameters that I recommend to you guys as well. What we're going to do is we're going to end today's video here. And at the end of today's video, when the credits start rolling, you guys can go ahead and watch the live trading that I will insert after the fact here in today's video. So if you enjoyed it, press that like button for me, subscribe to the channel, and I hope to see you in the next one. Peace out. So that QQQ hold is pretty valid right now. If you want a front run, I don't mind it. You can definitely try the front run here. Look at this QQQ hold. That is interesting. You could try it, but you have to know, you have to understand why you lose here, right? There's a very good reason why this doesn't work. It's that SPY. That SPY level could be a smackdown. Okay, AMD getting interesting. I might try to look to long NVIDIA here soon if I see a little bit more action. Okay, I'm long NVIDIA. I'm long the NVIDIA 112 calls. Stop under 111. I'm going to front run the idea because of that QQQ. Look at this. I'm going to long that, and I'm using this as my guide. Look at that QQQ 456. So looking to see if that 456 level does create this upside move. NVIDIA looks very good on that consolidation over the 20 SMA there. The problem with the rejection PIF is that equities are really strong for whatever reason, right? The SPY is sort of like NVIDIA is at new highs, which is, so that's a little bit tricky there. But I don't mind the watch 538. Let's see if that rejects. But definitely strong equities. Tesla strong. Microsoft holding well. Ooh, Tesla's holding the 200 SMA right here. Huh. Yeah, guys, I'm in some Tesla puts here. Stop over 205. I took some 200 puts. Stop over 205. I'm looking to fade this 205 level. Might not get it because of that SPY grind, that NASDAQ grind. Alright, I'm out. Taking my loss. I liked it. I think it looked good. But that SPY grind is too much. That ES hold at 54, too much.